At this point, we'll jump into the bigger picture charts and just discuss what we can expect in the upcoming week. So let's start off with the S&P. So with the ES, we can see that the market has been in this very strong uptrend, and even now the intermediate and bigger picture bias are going to continue to be bullish. So on Friday, we saw a little bit of balancing take place, which is very normal given just how much the market has moved. But overall, the market actually held up really well on Friday. 41 quarter to 43 quarter was actually a fairly aggressive area of support, and the market ended up holding that aggressive area of support. So heading into Sunday's Globex session and the upcoming week, we know that the buyers overall are still dominant. Now, the question is going to be whether the market has moved a bit too far and is now in need of a bit of a correction, a little bit of a pullback in order to just rest, balance, and then perhaps continue going even higher. We don't know. The market's making fresh all-time highs, so there is no hard resistance up here. But what we do know is that the market has put in a fairly significant move, and now in order to continue going higher beyond 48.75 to 50.75, we really need to see that underlying strength in the internals. We need to see broad market strength, some decent and sustained upside momentum to support the idea of a breakout continuation move. And if we're not seeing that in real time, then we can quite easily get a pullback towards some of the support areas below, perhaps down towards 35 quarter to 37 quarter, and maybe even a bit lower. I mean, if we look at just this recent swing low and measure it to the swing high, you can see that just a minor 38% retracement would bring ES down towards 25, 26 or so. And a 50% retracement brings it down towards the 25, 17, 75 area. And these 38% and 50% retracements are very normal and very typical. So even if the market pulled back towards 25.25 or even towards 25.18, it would not change the bigger picture uptrend. The buyers would still be dominant on the larger time frame. So that's something that we have to keep in mind as we go into the upcoming week. We have to determine whether we are continuing to see that intraday bullishness that supports the idea of higher prices. If so, then we can still consider trading on the long side. But if the theme starts to change a little bit, at least short term, and we start to see more weakness in real time, if we start to notice that breakouts are starting to fail, then perhaps the market can be ready for a bit of a pullback. And it's not going to change the bigger swing, but we could still quite easily get a 15-20 point pullback into support, and that would actually be a very healthy thing for the market anyway. So that's something that we're going to be keeping an eye on in the S&P. Moving on to the Russell, we can see that TF has also been in a very bullish phase here, and it's now balancing at these higher prices. So let's switch over to the 30-minute chart for the Russell just to get a closer look, and we can see that it's now essentially balancing and consolidating up over here. So heading into the upcoming week, we'll be watching to see the 1512.7 level. That is the high volume node of this balance that's establishing over here. And if we can break out above it, and again, if we're seeing that broad market strength and upward momentum, then it would just support the bullish case. But if we notice that the market starts to struggle at 1512.7 and starts to head lower, we have some support here at about 1504.5 to 1505.5. And then if you take this area out, then we can get at least some liquidation from any of the buyers that might have initiated new longs over here. We know that typically when you get a balance breakdown, there's a tendency for the market to expand the range by about 100%. So if we look at this small balance, a 100% extension takes us down into this support at roughly 88.5 to 91.5. And that would still be an area where buyers could be active in the Russell. And then we have this swing low over here at 1478.6. So again, that bigger picture bias, intermediate bias is very bullish in the Russell as well. So even if you get a short-term pullback, buyers are very likely to be active at these areas of support, and that bigger picture uptrend can exert itself at pretty much every spot on the way down. So in a market like this, we just have to be more conservative and selective on the short side. It doesn't mean that we can't take short setups. We can be open to them, but we just need to see more evidence supporting the short side, and we need to get relatively good trade location. Shorts also need to be timed a little bit better because they're counter trend. So that is how the Russell is shaping up. Moving on to NASDAQ, we can see that NQ broke out to a fresh all-time high last week. And now the question is going to be whether this breakout is actually going to sustain. Friday's price action in NQ continued to be bullish, and so far the buy side is in control. So we are going to keep an eye on roughly the 6,000 to 6027 area to see whether this breakout is now sustaining and continuing. If the breakout in NASDAQ continues to be successful, then that would support the bullish case in the Russell and the S&P. But if we notice a failed breakout where NQ drops back below the 6,000 level, then we need to reassess the situation across the equity markets, because a failed breakout in NASDAQ could weigh on the Russell and the S&P, and at the very minimum it would limit the upside, and it could quite possibly even result in a deeper pullback in those other markets. So that is how NASDAQ is set up. Lastly, let's review crude oil. So with the crude oil market, if you recall from last week's video, we talked about how the 51 to 51 quarter area was going to be key. So we saw a breakout in crude oil, and then the question last week was whether the 51 to 51 quarter area would hold. If the breakout was going to remain intact, then the buyers would have to hold crude above that level. You can see that that area ended up failing, and once oil dropped back below 51 to 51 quarter, the sell side really became dominant because the pattern changed from a breakout to a failed breakout. And ever since then, the sellers have been active, and you can see how this 51 to 51 quarter area, which was support, ended up becoming resistance. So broken support started to act as resistance, and since then, the sell side has been more dominant. So now heading into the upcoming week, we're going to be watching to see whether the sellers can maintain control. So if the sell side is really going to continue to be dominant, then ideally you want to see oil holding below 49.7 to 50. As long as it's holding below 49.7, it would serve as a confirmation that the sellers are in short-term control, and from there we could pull back and test the support at 48.3 and roughly 47.5, where on first test we would expect a buy response, and then we have the stronger support down around 45.9 to 46.2. So that's a pretty high probability area for buyers to be active in the event that oil actually drops that much in the upcoming week. So right now, the question is really going to be whether this breakdown attempt that took place on Friday is going to remain intact. So if the sellers are going to maintain control, then ideally you want to see oil holding below 49.7 to 50. As long as it's holding below that area, we could quite easily see a move down towards 48.3 and roughly the 47.5 area where buyers can step in. And then if that area goes, then the next spot where buyers can be active is roughly around that 45.9 to 46.2. So that is how the oil market is set up, and that is a wrap for today's video. That is the outlook on the markets for the upcoming week. Aside from that, I hope you all had a great week in the markets, enjoyed your weekend, and good trading in the week ahead.